July 29th. The title really says it all, doesn't it? KOSPI falls 5.98% on an SK Hynix Q2 earnings miss. A historic shockwave literally just hit the Korean market. I mean, look at our adorable mascot, Loro, here. Completely shell-shocked. We're jumping straight into the data today for this explainer because, guys, these numbers are absolutely staggering. Right at the opening bell, the sentiment wasn't just your run-of-the-mill panic, it was utter shock. Make no mistake, this was not your standard market pullback. We literally witnessed a systemic event. The KOSPI plummeted a brutal 5.98% in a single session. And the breadth of the damage? A near total washout. Out of 943 listed stocks, a staggering 805 plunged straight into the red. It pretty much wiped out every single sector across the board. To put this into perspective, this plunge marked the very first time in Korean stock market history that circuit breakers were triggered on 2 consecutive trading days. The gravity of the situation was completely unprecedented. So what exactly was the primary catalyst here? Well, SK Hynix reported their Q2 earnings and they posted a massive 79.32 trillion won in revenue. I mean, absolute record figures. But in a market priced for AI perfection, it still completely failed to meet those sky-high consensus expectations. And that earnings miss sent an immediate, chilling signal right to the street. Weak DRAM pricing power. Because these companies operate in the exact same global environment, this shortfall didn't just hurt SK Hynix. It directly nuked the valuation of its massive rival, Samsung Electronics. But hey, a missed consensus was really only half of the equation. Let's pivot to the secondary catalyst acting as a twin engine for this crash. We need to talk about the looming threat from China. The market is suddenly facing a massive new supply risk. Reports surfaced that Shanghai Aishengna is successfully expanding their domestic lithography production. Simply put, this allows Chinese chipmakers to just pump out DRAM chips without even worrying about Western export controls. So the market immediately priced in a future where memory chips completely flood the market, which would absolutely crush the profit margins of incumbents like Samsung and SK Hynix. So you take these twin catalysts, the consensus miss and the China supply threat, and they absolutely panicked the domestic trading floors right here in Seoul. The selling pressure was just immense, leading to drastic, mechanical market halts. Let's rapidly walk through the timeline of the breakdown. At 10:55 a.m., a sell-side sidecar is activated. It's basically a mechanical pause to stop automated program selling from spiraling totally out of control. But it wasn't enough. At 12:32 p.m., a level 1 circuit breaker halted all trading for 20 minutes. And by 3:30 p.m., algorithmic selling compounded so heavily that the KOSPI closed devastated at 5663.24. Now, on the surface, this looks like a blind, panicked market exit, right? Everyone just running for the doors. But, as we always do in this explainer, we need to challenge that surface-level narrative. Because if we look closely at the institutional flows, we start finding some really fascinating hidden signals. Here is our first hidden signal. Foreign investors dumped 1.24 trillion won of SK Hynix common stock. But they didn't actually flee Korea. Instead, they strategically rotated. They bought SK Square, which is SK Hynix's parent company, along with Samsung preferred shares, and a whopping 1.65 trillion won in KOSPI 200 futures. So they reduced their direct risk, but they maintained massive economic exposure. Our second major clue lies with the domestic institutions. They didn't panic and flee either. While the entire market was flashing red, domestic funds actually stepped right into the fire and bought the dip heavily. The data is undeniable here. Institutions concentrated over 75% of their entire net buying directly into the 2 bleeding semiconductor giants. We're talking 1.28 trillion won into Samsung and 1.11 trillion won into SK Hynix. They were aggressively and very purposefully absorbing that foreign sell-off. Which brings us to the final, and honestly, perhaps the most surprising piece of the puzzle. The highly calculated behavior of individual retail investors during all this chaos. You might expect retail investors to just get wiped out in a broad margin call, selling indiscriminately. But actually, individual traders selectively reduced their Samsung exposure by 573 billion won, all while actively buying the steeper dip in SK Hynix. This kind of highly targeted reallocation completely disproves the theory of a blind, market-wide forced liquidation. So the market wasn't just crashing, it was actively repositioning right beneath the surface. Smart money and smart retail were basically playing chess while the headlines screamed panic. The real question is, when the dust finally settles on this new chip landscape, who is going to be left holding the ultimate advantage? If you'd like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.